Hi, Chris Lamb here. We're going to talk about what happened in the housing market in 2020. We're also going to take a look at the crystal ball and give an idea of what we think is going to happen in 2021. Stay tuned. Hey, well, happy December. We got a lot to unpack right now. We're going to do a year review looking over 2020. We're going to talk about what's happening in 2021. Now, full disclaimer, I said we're going to look at a crystal ball. There's no such thing. None of us really know what's going to happen next year. In fact, I think we would all agree that there's more uncertainty right now than maybe we've seen ever, or certainly in my lifetime. But we're going to jump right in. The first thing I want to talk about is a year-over-year review of some of the different data points we follow in housing. The first one is mortgage rates. Mortgage rates as of today in December are 1% lower than they were this time last year. The other thing we want to look at is home prices. Home prices in the year 2020, for the most part, rose somewhere between 5 and 8% from 2019, and that's a big number. Now, if you want to go back to pre-COVID, the housing market was doing really well. We had a little bit of a lapse right when COVID hit and most states experienced the lockdown. But then what happened was mortgage rates went down. There was a pent-up demand, home buyers jumping into the market when they were finally able to go out and see homes after the lockdown. And we saw a big surge in a lot of that inventory getting bought up quickly, multiple offers, and home prices as a result of that have been pushed up. Currently right now in the month of December, we've seen year over year about a 28% increase in purchase applications from this time in 2019. And so as we look forward, what does this mean? Well, there's a couple things that we want to talk about first. I talked to a lady recently, a friend of mine who, she pays attention to real estate. She's an investor. She thinks that housing is going to crash next year. And I follow a lot of different thought leaders on housing, on real estate, and different markets that people think are going to go one way or the other. And there's a lot of people that are looking at the forbearance issue right now, or the people that were during COVID stopped paying their mortgage payments and took advantage of some of these government programs that allowed them to defer or forbear their mortgage payment to paying at a later date. Now, this is a large chunk of people nationwide that have taken advantage of these programs, and many are thinking that when those forbearances come due, a lot of these people are not going to be able to afford to make their mortgage, not going to be able to afford to catching up their mortgage payments, and some of these people may no longer have an income because of some of the jobs and small businesses that have gone away as a result of COVID-19, unfortunately. Now, here's one thing that you're not hearing out there, and it's something that we've talked about many times before that's really important to look at. When we had the housing crash in 2008 and 9, you had people who had adjustable rate mortgages. Their payments were doubling and tripling on them because they got into loans that weren't good for them. What we have currently are people that have got into 2 and 3% mortgages over the last few years, and most people are paying less for their home than they would pay to rent a home that's similar in square footage. And most of you that are watching this video would attest to that. The other thing that's really important is most people that own homes right now, even if they just bought last year, have a significant amount of equity. So worst case scenario, if we do see this forbearance issue come up in 2021, we're probably going to see a lot of inventory come to the market at once. But because there's been such a lack of inventory, I don't personally see how that's going to be something that's going to crash the market. Best case scenario, it's going to cool off the appreciation that we've seen because there has not been enough supply to meet the demand. Most experts are predicting 2021 to be a very similar housing market as 2020. We will continue to see a heated housing market. We will continue to see rates stay relatively low. And that's kind of what I'm guessing as we go forward. Now, anything could change. I could be totally wrong. I always reserve the right to be wrong, but that's kind of what we're seeing as we go forward. Now, the last thing I want to talk about is refinances. Half of the people that had mortgages in America applied for a refinance in 2020. There's still a lot of people that haven't, surprisingly, because rates are unbelievably low right now. But as people took advantage of low rates, they put themselves in even a better position to weather any potential storm that could come with the uncertainty of 2021. So you have all-time high equity. People have more equity in their homes than ever before. They could certainly sell it, take that equity and do something different. and you have people that are paying low mortgage payments because they have the lowest rates that we've ever seen in history. The alternative to go out and rent doesn't look so great right now because rents are pretty high in most areas in the nation, certainly in California. So if you have any questions on this or anything else, I encourage you to give me a call here at the office. I hope you and your family are doing well, navigating these times okay, and we'll have an update for you this time in January. Thank you.